So guys, I hope you guys are doing well. So my voice may sound a little bit weird today because I'm under the weather, not feeling great. But still, I think I can express. As long as you can tolerate my voice, I think we should be okay. So today I want to keep it brief. I want to talk about, when we look at the market, especially from a very short-term perspective, right? Let's say intraday perspective, or let's say the next couple of days. The one very common misconception that I see people have is that if you want to trade successfully, you need to know what the market is going to do, right? So you need that ability to predict what the market will do. That is a very common misconception that I see a lot of people have, and we have plenty of indicators, super trend and this and MACD and RSI, and we have plenty of indicators that are out there which we use to figure out what is that the market is going to do next, right? And in my experience, those indicators, they work well on broader time frames. So let's say, for example, you are looking for a positional trade, or you are looking for, let's say, a long-term support of a stock. So those kind of things, they work well on a longer time frame. But when we look at something from a very short period of time, right? Let's say, for example, today. So this morning when the market, made this big bar, about 50-point move, and the kind of setup we had, I felt like maybe, oil prices are down. It's maybe a good time for looking for a long trade. So I went long, but it did not take a lot of time to figure out that the market did not want to go up, right? So in fact, the market started to come down, and you can see throughout the day, the selling just kept getting more and more intense. And towards the end of the day, there was some short covering. So the point that I'm trying to make here is it's almost impossible, right? It's almost impossible to predict what the market would do in a shorter time frame. Right now, some of you might be thinking that, okay, if you cannot predict what the market will do, how will you trade? Right? How will you trade? So that is where I want to, ask you guys to think from the perspective of probabilities, right? Probabilities. So on expiry day, I think that this phenomena is most pronounced. So I have intentionally brought these Bollinger Bands. I'm sure a lot of you are aware of this. Bollinger Bands are basically based on the standard deviation of how much a stock or index has moved. It tells what is the probability of the stock staying in a range, 2 standard deviations away, 3 standard deviations away. I'm sure you guys know what I'm talking about, right? So I like to see from a probability perspective how this market is behaving, right? So whenever we are in the Bollinger Band, there is a lower end of the Bollinger Band and there is a upper end of the Bollinger Band, right? So the idea is that when the market is moving down or going up, we basically assume that the move is going to sustain in the same direction. That's the basic assumption. And if it does not, then we have to keep adapting to, at any point of time, where are the two boundaries of standard deviation, right? Here and here. Whatever is the case, we basically assume that Nifty will stay in this broad range. Okay. Now what happens? So if you take a look at how the market moves in expiry day, if market makes a move from one end of the Bollinger Band to the other end, it means stop losses are going to get hit. Okay, stop losses are going to get hit. So I'm going to explain it again. So in this particular case, if market was here at the one end of the Bollinger Band and came to the next end, it means all the stop losses that you had for the call option most likely will get hit. Okay. Similarly, from this point onwards, when the market made this move, stop losses will get hit on the call option side, right? And if somebody entered a trade here, then the put option stop loss got hit. Similarly, from here to here again. So the idea behind looking at the market from a probabilistic perspective, the reason I'm plotting the Bollinger Band is to give you a sense of how you can trade, right? So throughout the day, for example, I kept adapting, and this is the screen recording of how the day was turning out. I just have to keep, adjusting myself throughout the day. And then stop losses got hit, as I talked about. Stop losses got hit because Nifty especially seems to have more volatility now as compared to Bank Nifty. So let me quickly go back to Bank Nifty to show what I'm talking about. So let's take a look at this, right? So we saw in case of Nifty how many stop losses got hit because market went from one end of the Bollinger Band to the other end, right? In case of Bank Nifty, let's see how many times did it happen. One time, of course, it happened here. From one end, it came down. So one time, call up all the put option stop losses got hit. But throughout the day, not a single time Bank Nifty went from one end to the other end or from the other end to this end, right? So interestingly, what is happening is that Nifty is becoming harder and harder to trade as compared to Bank Nifty. That's a very interesting observation. And there are factors out there because currently there is a divergence between Nifty Bank, which is much stronger as compared to Nifty IT, which is dragging the market down. So the volatility comes from the two forces that are acting on Nifty. And that brings me back to my own plan for trading Bank Nifty, which I'm running a little behind because I was hoping that our backtesting would be done by now, but we are facing some difficulties in our backtesting. And, hopefully we can figure these things out because in Bank Nifty, you can of course make more, not because it's less volatile, but because premiums are higher. Anyway, so that's basically what I wanted to communicate in today's video, that don't be under the impression that if you have to trade, you need to know where the market will go. If you have a reactive mindset that you keep aligning yourself with where the market goes, you have a much better chances of success. And today is a perfect example because today I turned from a complete bull to a complete bear in not a lot of time. Basically in 1 hour, I just turned completely different. So that is the mindset for a trader, right? A trader has to keep adapting, and profits and losses are not in our control, right? We trade based on our rules. We trade based on a system. We trade based on a logic. Sometimes that works. Sometimes that doesn't work. The days it works, we have to be happy. We have to be grateful. And then the days when it doesn't work, we have to accept that, yeah, it's okay. Our strategy will not be profitable 100% of the time. There will be 30%, 40% of the time where I will not be profitable. As long as the losses remain small, I can still stay profitable in the long run, right? So that's basically it, guys. The day was fine. The day, I just still feel like maybe I could have done a little better had I traded Bank Nifty, but I was not ready with Bank Nifty yet. And hopefully, maybe in a couple of weeks we can get there. Anyway, I will keep you guys posted how things go, but I hope that you guys had a good trading session if you traded. If not, at least you learned something new today.